This is the Meerkat in for D7 one more time with the weekend review, good through January 24th, 2016. Well, let's take a look here at what happened Friday, then let's take a look at what happened on the daily chart, then pull back to the weekly chart and pull back all the way to the monthly chart as we get near to the end of the month. So first of all, let's take a look at the numbers for Friday. SPY up 2%. The DIA, which is the Dow ETF, 1.3%. Look at those Qs. QQQ, which is the NASDAQ, 2.9%. And then we've got the small cap Russell up 2.4%. So we've got the NASDAQ and the small caps leading the way up. That's more bullish than it is bearish. And then look at bank. It came along for the ride, 1.3%, which it almost confirms it, lagging just a little bit. But here's the big story. We've got the VIX down 16.3%, down to 22.34. Hooah! We've got gold and silver down a little bit, with silver down to 0.59, gold down 0.46. And here was the big story on Friday. The oil up 8.2%. It closed above $32. Now, just 2 days prior, it was down in the 27 range. So that is a huge, huge rebound, and it brought the markets with it. The dollar was up slightly, plus 0.16, and no trend trade for the Grok traders out there. All right, let's take a look here at the daily chart on the SPY. And Wednesday, we dipped all the way down here, a bit of capitulation here, nice high volume, and then it started to work its way back up. And we have broken above this swing low here from 2015. And on the daily chart. So that's more bullish and bearish. We still have lots of resistance lines to work our way through, but we are now more in the bullish area. Now look, we are in a downtrend. We are currently in an up leg, technically, because we have two candles that are higher highs and higher lows. Let's take a look at the DIA, and the same thing going on here, and it closed just above its swing low from back here in 2015. And then we've got the NASDAQ represented by the QQQ, and it too is up here, clearly above here. Look where its swing low was, way down here. It tested it only on Wednesday, and then it is up here. So it's just a little bit more bullish than the S&P or the Dow. Small cap Russell, however, represented by the IWM ETF here. Oh boy. Look at our, here's this prior swing low here, and prior swing low back in October, September. We're not even close to coming back. Now we have broken here. We have had two candles with higher highs and higher lows, so we are technically in an up leg, but we are most severely in a down trend. So we need to keep our eye on that. And look at the oil here, the falling wedge that we talked about on Thursday. It closed just above it, and then Friday, kaboom! This is a very powerful bullish formation. Go to our chart school and check it out. That's falling wedge. Let's go to the weekly chart. Oh, before we do that, I just want to direct you to videos that I do as well, besides the broad market video here. If you go to Free Online Trading Education and go to Trading Videos, and right down here is where the daily review is, but right next door to it is where I do stock trading videos periodically. Now, this particular one I posted Friday is 3 trades, and you say, well, I don't day trade. Well, the lessons that I teach here, I show you a trade, why I got in, how I managed it, and why I got out. They applied not only to day trading, but also to swing trading and to position trading. So just suggest that you do that. Well, you say, I'm watching you on YouTube. Well, if you want to go to YouTube, just go to Grok Trade here on YouTube, our channel there, and it'll be posted here. Right now it's here. That's where the daily video will be, the most recent one, but it'll be posted right over here or down below. And you can also go back and look at some of my older ones, like here's one on some bull pullback patterns here. So just to recommend that you do that. See a couple of trades I actually did in the Grokstar trading chat room. All right, let's go back here to the weekly chart, and this is the weekly chart on the S&P 500, the SPY. Weekly candles here now. And look at that, we went bam, 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 whoop, all the way back up here. A little thin hammer here now. Possible reversal candle on the weekly chart. Now, please note that we did this swing low back here from 2014. We did close above that area, but we did not close above the swing low here from September of 2015. So we're right in between the two, so that's a possible line of resistance, but clearly we worked our way, pulled our way back up, and we do have lots to work up here, but maybe we have found the bottom or not. Let's go to the DIA, the Dow Jones Industrial ETF on the weekly, and bam, down here, another huge hammer, possible reversal candle here on the weekly chart, and right here's a swing low. It closed right at the swing low here from the September 2015. So we did go above the one back here from March of 2014. We're above that one, but we are still right. We are right at it, literally right at it. You see that dashed line there, the closing line. Let's take a look at the Nasdaq. It's a little more bullish than the others in that it clearly closed above its closing line here from the 2015 dip, and it's been way above the one back in 2014. So we have a higher swing, or we're working our way up here. And look at all these possible lines of resistance and right overhead. So we have our work cut out for us here. Now then there is the small cap Russell. Definitely not as bullish as the others, very bearish. And look at that, dip all the way down and pull its way back up. That's a bullish candle, possible reversal. And it's only possible, folks. It's only a probability that it would happen. So we work our way up here even further. But here's the swing lows from 2015, swing lows from 2014. We're not even close on the weekly chart. So that's just a little bit more bearish than the other markets. Now the problem is the small caps need to lead the way up or lead the way down. And right now they are lagging or will return back up to new highs. And let's take a look on the weekly chart on the VIX. And this VIX was very interesting. On Wednesday we went all the way up and we hit 32, and then we pulled back down, 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 and closed all the way down here at 22 here. So again, if it's above the 20 area, very volatile markets, and we have seen a lot of that. And then it closes down here in this range, and that's where the markets are acting a little more, quote, normal, unquote. So a lot less volatility at that point. So this is again the fear indicator. It's in the market has been pulled out. Let's go to the monthly charts. And this is the S&P monthly chart. Each candle is 1 month. Now this current candle is what we call an active candle because we only have the first 3 weeks of the month on this candle. We have 1 more week to go. But where's it telling us we've been? So what do we have here? We have a bear pullback in action. And it did pierce down there, but it isn't closed yet. If we end up closing lower than this swing right here, that's going to be very bearish. If we close above it, that's going to be good news, because and then we need some follow through next month. So right now we are kind of at a crossroads, and we are right at that swing low on the monthly chart from this prior swing low. Take a look at the DIA, almost exactly the same thing here. It's just a little bit below the swing low here from that we had 4 months ago, and it needs to keep working its way back up here. Notice it on the monthly chart, it tagged the 50 moving average here, and it tagged the 50 moving average there. Then we have the Qs here, a little bit more bullish, clearly above the swing low, the prior swing low here. And also the high base that we had back in 2014. So on the monthly, this one is a little bit more bullish. And then we have the small caps, a little more bearish, right? Way down here below the 50 moving average here on the monthly chart. And it's working its way back up Here, it's way below the swing lows from here and the high base from here. So we got a lot of work on the small caps to work our way back up on the monthly chart. So as we enter this wintry weekend, just remember that the markets have bounced off of their lows, and they have closed above some swing low resistances, and we still have a lot of work to go. Personally, I took my hedge off on Friday at noon. Friday was the first day of this trading year in which the markets opened positive and stayed above the closing line the entire day. That's why I went ahead and took off my hedge. What I did not do was to go all in bullish. Still waiting to see what happens. Is this just a bear pullback in development, or have we actually reversed to be bullish? Time will tell. Mark the Meerkat. Hey, just remember that the most successful traders in the world are obsessed with protecting their capital and controlling risk. Today, you become one of those traders. Trade well.